Yo guys, welcome back to another video. It's your boy Will Trades in the house, and in today's video I'm going to be talking everything about price action, how volume reacts to price, how key levels react to volume and price, and how you guys can read candlesticks a lot better to judge if you guys should enter on this breakout or not. Help you guys with fake out and so much more. And price action is one of the most important fundamentals to learn as a day trader or overall trader in general. As well, if you guys want to live trade with me every single day in the markets and actually be a part of my trading team, that will be down below in the description. Without further ado, let's hop into this lesson, and I hope you guys always stay green. So we're in the charts. Here's the charts. Here's Thinkorswim. If you guys know already, this is what I use to look at my plays, look at my key levels, and so much more. So let's start out with price action. Price action means the volume and price that the current asset moves in. So obviously, if you guys know, these are called Japanese candlesticks. This is how I identify price and how we can identify price on a candlestick-based pattern. Now, very, very quickly, how do candlesticks form? Well, if we jump into here, and we can see this white candle technically represents a red candle or a downwards momentum candle. So when a red candle opens, it always opens from high to low. Okay, so it opens on the top and closes on the bottom because price is pushing down. Now, these wicks actually represent where price went to but didn't close. And since we're on a 1 minute time frame up here, every single candlestick forms in a 1 minute time frame basis. So in an up candle or a bull trend where the overall market price increases, instead of it going from top to bottom, it will go from bottom to top with obviously wicks showing price where it went to but closed here. So it opens here, pushes down to here, comes all the way back up to here, and then closes here in that 1 minute interval. If we go to a bigger time frame, which would be right here, we can see that now this is a 1 hour candlestick, which represents in 1 hour price movement. And it says the exact same thing. In 1 hour, this candle went from here all the way to here and then closed right here. So again, very, very wicky, and obviously the overall market as of today was kind of in a weird up-down situation. Didn't really move anywhere in that range. Now, since you guys kind of understand how a candlestick forms, how can we make sure that price action is on our side? And that's one thing, is about time of day. You always want to trade in the mornings or last hour of market. In the mornings and last hour of market has the most amount of volume. If you're trading with no volume in the market, price is just going to do this or be very, very choppy in a very, very tight range, which is going to be very hard for you to place your trades. If you have good volume and good momentum, hashtag good price action, it's going to help you tremendously in your trading. Okay, so obviously time of day, I trade between 8:30 to 10:30 Central Time. Not before and not after. Now, if we go to a smaller time frame, we can see now the size of price action or these candles and how they move compared to, look at this type of volume compared to this type of volume. You see, placing trades in this type of volume is a lot easier than when you start later in the day, past about 10 o'clock, 10:30, volume kind of dies down and just goes nowhere. So again, time of day is important. The size of the candle is important. Now, the negative about trading with high volatility is sometimes there's going to be a lot of wicks, right? You can see price went from 28.06 all the way to 28.52. That's over a 30-point plus candle, right? It can be very choppy and very wicky depending upon what you're looking for to trade. Okay, but if we go ahead and place our key levels, which for example, we have a key level here and key level here, when you can see when price moves and how aggressive it moves, looking at level 2 or time of sales, and you can see if there's more buyers and sellers in a given location, will help you lean to go long or to go short. Now, this is a very, very quick video about price action. Make sure you guys have good volume, good liquidity, which with futures always has good liquidity. Make sure that the time of day is very important, and always make sure that you don't get caught up in what? Consolidation. You want to always trade with momentum, with decreasing or increasing momentum. You don't want to trade in sideways momentum. Very, very important with that. Okay, so other than that, that's pretty much what price action is. Make sure that you have volume, liquidity, and time of day. If you guys can identify that with key levels and trend direction, you guys are one step closer to becoming a profitable trader. I'll see every single one of you guys in the next one.